Welcome back to the Stablecoin podcast. I'm your host, Luther Madej, head of payments at the Algorand Foundation. And then we have the gentleman of stablecoins, Rami Soleiman, who is president of GMO Trust and co-founder of Stablecoin Partners. Today is a super exciting day for us. We actually have the amazing Kevin Lehtiniitty, CEO of Borderless, a company that's building global liquidity and payments infrastructure for stablecoins. And Kevin's not a newbie to this. Like, Kevin has spent the last decade designing FinTech rails, first as the CTO of Fortress and then the chief product officer at Prime Trust, and now leads one of the most exciting projects to make stablecoin state settlement seamless across borders. But before we get started, a quick disclaimer. The views expressed here are those of the hosts and the guests and do not reflect their own organizations. This episode is for educational purposes only and not to be taken as legal, financial, or any sort of investment advice. With that, Kevin, welcome to the show, my friend. It's a pleasure to have you.
It's great to see both of you guys. I was about to be a little offended when you called Rami the gentleman, and I was like, what does that make me? But I'll take amazing. I think that counts as a qualifier, so thank you.
I certainly don't have exclusivity over it.
I plan to give him like a different title. Like, I was hoping for like the Knight of Stablecoins for the next one. So, you know what I'm saying?
Lord Rami, Knight of Stablecoins.
Lord Rami, Knight of Stablecoins.
I can live with that.
So Kevin, we will be jumping into like the whole stablecoins piece, but you know, the start and like originally, you know, with two amazing startups, etc., that really went on to become kind of like cornerstones when it comes to financial services. Like, how did you go, like, what was that journey like? And then like, can you help us connect to from there to stablecoins and then Borderless?
Absolutely. I'll give you the TLDR, which is basically I've seen some shit, and then we can dive into the longer conversation.
Yeah.
You know, I was the chief product officer at Prime Trust from 2016 to 2020. And as part of that, I had the fortune of being able to design and build the world's first stablecoin as an issuance platform, which has been a very interesting take on stablecoins. And that was used, the cornerstone customer was TrueUSD back in the day, which was the first US-based fully reserved stablecoin before, you know, USDC had even been released. And then from there, it was True GBP, True CAD, True Euro. So I've had the fortune of building stablecoin issuance products. I've had the fortune of being able to launch stablecoins in multiple currencies around the world. You know, for me, the allure of blockchain was internet native money. It wasn't, you know, meme coins and speculation. And then I think what became really obvious was if stablecoins were going to be internet native money, then, you know, the next big piece would be RWAs, specifically T-bills, tokenized treasuries, things like that, to get yield-bearing assets on chain. And I was fortunate enough to get to be part of the creation of the ERC 1400 token standard. And the joke that I like to say is that I've been, you know, working on stablecoins since 2016, which is a really long time to say stablecoins are coming next year. And I think thankfully we're starting to get some real market adoption, but you know, it wasn't a thing back in the day, right? So it's not like TrueUSD is now a public company like Circle is and others. And ultimately, Prime Trust as a business ended up pivoting into exchange infrastructure versus kind of stablecoins and payments infrastructure, because let's be honest, in 2017, 18, 19, 20, even 21, that was the only actual use case of digital assets with traction was speculation and gambling. And the large enterprise customers were the exchanges. And for Prime Trust, that meant being the underlying infrastructure to like Binance US, Kraken was a customer, Bittrex was a customer, et cetera, et cetera. And that was the core market. It was providing payment rails to crypto exchanges. It was providing settlement infrastructure. People don't know this, but Prime Trust settlement network, PrimeX, was an order of magnitude larger by transaction volume than Silvergate's Signet or Silvergate Sen or Signature Signet. So I also kind of had the privilege to build these settlement networks and all these sorts of things. And then moving from Prime Trust to Fortress, the focus then became a lot more on real world assets, right? Like exchange infrastructure was played out as a narrative, and the interest was on, okay, well, you know, it was born in the NFT bubble. And it wasn't about the JPEGs, but it was about how do we look at non-fungible assets and put them on chain, whether that be real property, whether that be identity, things of that nature. And where Fortress ended up finding itself was powering a tremendous amount of on and off ramp infrastructure. I think at one point, Fortress powered 80% of the on-ramps available in MetaMask. So kind of regardless of who you went to, different compliance products, different UX products, different pricing, all those things. But ultimately, the underlying rails and liquidity were all, Fortress's stack. Both very interesting businesses. I think Prime, when I left, was 110 million kind of ARR run rate. Fortress was in the 70 million ARR run rates. So, both grew very quickly, 700 employees and 200 employees or something like that, respectively. But the thing that I've always been passionate about is moving money around the world. And what I started to see happening more and more was the rise of what I think of as stablecoin-enabled financial institutions. And we can think of these companies as like Prime Trust and Fortress, certainly in that batch. In the US, also the Zero Hashes, Paxoses, Bridge, etc. And then internationally, as like the Bitsos, Trace Finance, Avenia, Kappa, Yellow Card, Reap, Honeycoin, etc., etc. And what I started to see a very strong use case for was really the cross-border remittances. And looking at the enterprise type players that we were servicing in both of those two previous companies, it's like if you're going to not just build if you're not a startup starting out, right? If you're trying to really build on top of stablecoins at scale, what does that mean? And right now, that means that you need to build across a patchwork of different locally licensed providers in all these different regions. And I don't think that changes. Because while stablecoins and blockchains are inherently global assets and networks, that's juxtaposed against inherently geographically fragmented things like local banking rails, regulatory licenses, and central bank issued currencies, right? We're not going to see the Brazilian government all of a sudden throw out Brazilian rupee or Brazilian reals for Bitcoin. Or the Indian government say, you know what, screw rupees, we're going all in on Bitcoin now. Or any sort of a global license with, global regulatory frameworks. Even JPM doesn't have a license in every single country in the world, right? And they have theoretically unlimited money and talents that they could pursue these sorts of things. So for the foreseeable future, we're going to have this juxtaposition of this global internet native money and these local banking rails, regulatory licenses, and fiat currencies, which inherently creates an opportunity for there to be the layer that crosses between these two things. And there's a lot of people building this, and they're coming at it from different angles. Our inherent bias is to build credibly neutral networks. That's where we believe is the strongest kind of path to bridging these two things together. And the value proposition is quite simple. If you're building on stablecoin rails at scale, instead of having to connect to every single on and off ramp provider or stablecoin enabled financial institution, API plus API plus API plus API plus API, maintaining all of those connections, and then operationally having 20 different transaction ledgers that all have part of the different activities that you need to reconcile against, you connect to Borderless one time. And inside of Borderless, you now enable all the connectivity that Borderless has. Great, I want to turn on Yellow Card. I want to turn on Bridge. I want to turn on Bitso. I want to turn on, Cobre. I want to turn on Honeycoin, whoever it is. And now from that one central place, you can transact across an entire network of locally licensed counterparties around the world. And to us, that's the giant unlock of letting people go global fast or operating locally at global scale.
Yeah, I love the way that you connected the dots there, because this concept of having a patchwork of like different entities, it's always existed, right? Like, I mean, even in traditional financial services, like that's how correspondent banking is. It's a patchwork of banks that happen to use the system, but then there's all these intermediaries, and it made sense when you're dealing with like local currency. Like I want to send US dollars. Okay, it needs to be US dollars here, but it needs to land in Mexican pesos there. It made sense. But to your point, like to have the asset be global, but then still have like a patchwork, there's no fit. It doesn't like really fit the narrative. And so I love what Borderless is doing here from like and I think you've said this before in a separate conversation, like it's one API, right? It's one API gives you access to every provider or, and as you kind of grow that patchwork of providers on the back end,
I think it's
you're really
25,
obfuscating
26 now across 70 different countries. So,
nice.
Pretty comprehensive today and growing quickly.
Yeah. From a use case perspective, like, is this Are you starting to see more and more adoption from the business side of it, from an organizational side, or or is it still more consumer or retail driven?
So we have, we as a business are always B2B, and some of our customers are B2B, and some of our customers are B2C. So in that way, we're kind of B2B2C and B2B2B. And the way that we think about kind of the three leading ICPs that are using Borderless, the first is stablecoin orchestrators and stablecoin companies, right? A lot of stablecoin companies, the way that they think about the world is that there is some sort of core geographies. It could be 4 or 5 countries in Latin America. It could be the US. It could be Africa, wherever that is. There's the set of 4 or 5 geographies that they think are absolutely core to their business. And in those core geographies, they want to fully vertically integrate. They want to get the regulatory licenses. They want to own the direct bank relationships and access to the rails. And they want to be able to provide their own liquidity. And then there exist another 190 plus countries around the world that they want to be able to offer into their platform that they see as kind of non-core jurisdictions. And for those, they want to partner with the leading regulated counterparties in each of those geographies in order to bring that into the platform. And Borderless gives them by far the fastest way to scale those strategic alliances and, deploy those corridors into their product. And that's kind of the stablecoin company ICP. And then there's a FinTech ICP, which is probably not surprising. We see a tremendous amount of FinTechs today that are building these global dollar accounts, these stablecoin neobanks, stablecoin-driven ARAP platforms, et cetera, et cetera. Traditionally, the way that we've interacted with those companies is through the stablecoin orchestrators. So we've said, okay, as a FinTech, you're a customer of the stablecoin orchestrator. The stablecoin orchestrator is then a customer of Borderless to connect to this network of regulated counterparties. And we've spent a lot of time trying to figure out what does a FinTech product look like. And we started launching that last month, where we're now able to have FinTech sit directly on top of the network of counterparties instead of having to access it through a node. And, that started to grow a lot of things in an interesting way. And then, more interestingly, perhaps, last week we signed our first traditional bank as a customer.
Nice. And congratulations.
Thank you. Yeah. They look a lot like stablecoin orchestrators, interestingly, where they're saying, okay, we are the bank, therefore we have the direct bank relationship. Yeah. We have the licenses. We have it in, a jurisdiction or a small handful of jurisdictions. And we want to use stablecoins for cross-border transfers, but we want the funds to land in fiat. So what that means is we need to connect to a network of regulated counterparties in all these jurisdictions that we want to send to that we can effectively stablecoin sandwich with, and they can then provide that off-ramp into local bank accounts. Or if we're the receiving bank, they can provide that on-ramp service, and then we can receive it and deposit it into our customer accounts. So we're definitely exploring that a little bit more. That wasn't an ICP that we had really started with. We said, okay, we're going to serve, stablecoin companies because it's incredibly symbiotic, right? You can see company A that says, look, my core geo where I want to have my licenses and direct bank relationships is in, the top 4 countries in LATAM. And I want to connect to a counterparty that covers Africa in order to bring that into my platform. And at the same time, you have company B that says, my core market are the top 4 countries in Africa. That's where I want to own the licenses and direct bank connections. And then I want to have a regulated partner in Latin America to bring that into the platform. And now all of a sudden, Borderless as a network is the connectivity between these two parties that says, great, company A, your core market's LATAM, you want to partner for Africa, connect over here. Great, company B, your core market's Africa, you want to partner for LATAM, connect back into company A. And Borderless is facilitating all these bilateral flows between these parties, all through one API, one platform. And maybe to tease a later topic, we haven't even gotten into the intelligence layer that we've started playing with recently.
Okay. Yeah.
And now it was kind of a surprise to us, wait a minute, not the JPM size banks of the world, but some of these, emerging market banks, they're actually incredibly interested in doing the exact same thing.
Yeah.
And why wouldn't we offer them as well, this network of regulated counterparties around the world?
Well, you're allowing them to play to their strengths, you know what I mean?
Exactly.
At the moment, the whole point of the top 4 local banks in an African jurisdiction, they're going to be much better at serving the last mile customers than JP Morgan or Citi or the international players or even the regional players. So I think it's lovely. I think it's brilliant. You're actually allowing these sort of regional players to actually fast track a route into international relevance, and connecting the two geos together. And I think it's enabling really, really interesting brand of competition between the international. Remember, JP Morgan City has spent hundreds of years and lots of money to get regulated in a high number of jurisdictions. That doesn't mean they're in all of the jurisdictions, but they're in quite a few of them, which means they can compete with the local players, but also have the power of the global franchise, which is great. But if you stitch together the best banks in Africa, the best banks in LATAM, the best banks in 3 or 4 different jurisdictions, and you yourself are a local bank in one of these regions, you can pretty much achieve maybe 80%, 90% of the same capabilities, I would have thought, to the same standard, if not maybe even slightly more efficient using the stablecoin sandwich. So yeah, I think that's phenomenal for competition. I think it's very, very interesting.
This David versus Goliath idea is something interesting that resonates a lot with us. When we started the company 18 months ago, there was no such thing as a stablecoin payments network, right? We didn't know what to call it. We were calling it an orchestration network. And we were talking to VCs raising around. They're like, what is a payments network? Are you an issuer? Are you a blockchain? And we're trying to, express this concept of this third entity that is neither an issuer nor a blockchain, but is this connectivity and messaging that allows you to orchestrate across all these different providers. And it was a really difficult thing to articulate. And then, more recently, Circles looked at that and said, oh, great, this is really cool. Thanks. We'll create it, put all of Circles capital and muscle behind it and call it
Fireblocks
CPN.
did the same thing. Yeah,
and then Fireblocks doing the same thing. So we very much feel like there's this David versus Goliath moment where, you have these companies that are much, much larger than us, that are much better capitalized, that are saying, thanks, Borderless, this is an amazing idea. Let us go ship that with our resources and our distribution. But fundamentally, where we are making our bet is that the market is going to care about credible neutrality.
Exactly.
Meaning, Circle's payment network has no incentive to promote non-Circle issued assets. And even if they did, if you were a non-Circle issued asset, would you trust Circle to be your core infrastructure provider and distribution network? Probably not. Same thing around, wallets and the other providers and things of that nature. So kind of what we're hanging our hat on is to say, okay, in these other networks, you have one centralized rent taker who is trying to monetize you and your volumes, right? If you're transacting on CPN, I'm sorry, but the value doesn't accrue to you. The value accrues to Circle, right? This is almost like a vampire attack. And I think the same way about corp chains and other things like that, right? Where you have this centralized player that all the value is actually accruing to, and they can set the dials on the rents they want to take and all those things arbitrarily. And we've seen network effect businesses and tech from the beginning of time slowly go from giving that value to network participants to all of a sudden capturing and internalizing that value. And that's when they get very profitable very, very, very quickly. So the bet that we're saying on is, look, in a payments context, the networks that have won have been open networks, right? It wasn't, if we think about, Visa and kind of what D did, it was taking all these competing card programs where it's like, hey, sorry, as a merchant, I'm banked through Bank X. As a consumer, right, you're banked through Bank Y. Therefore, your card doesn't work with me as a merchant. And saying, guys, this makes no sense. Let's create a network that supports all of us, that doesn't have a central bank that owns and controls that network, right? We've seen the same thing with SWIFT, where SWIFT is a credibly neutral network with tremendous amounts of bank participants. SWIFT isn't fully, wholly owned by JPM. It's not the JPM network. And our bet, which we'll see whether it pans out to be true or not, I'll be very sad if it's not true, not just for Borderless, but just for the industry as a whole, is that credible neutrality matters. And if you are a builder or you're an entrepreneur, you want to own your business. You don't want to work incredibly hard to make Jeremy wealthier. Yeah. Not anything against Jeremy. He's built an incredible business with Circle. But as the person who's putting their blood, sweat, and tears into their business, you want to accrue those rewards. And in order for that to be true, you want to be transacting on and you want to be supporting a credibly neutral network of your peers versus a corp chain or a corp-controlled network where that value is actually accruing back into some central, very opinionated party that controls all of this.
I completely agree with you, and I see where you're coming from. But just to kind of like tease the point further, so I come from the payment space, right? Like, so traditional merchant services space, right? Which I'm happy to say is slowly evolving to also use stablecoins, which I'm super excited about. But one of the things, the common questions that people ask me is like, okay, like which one should I use? Like USDT or
Yep.
like what is this thing called USDG? Like the beauty of it is like there is optionality now in the marketplace depending on what you're trying to do, but there's not a clear mission or a message that says, okay, you want to do this, go use this asset. You want to do this, go use this asset. Like you guys probably get very similar kind of questions. Like either it's like, I just want the money to get there, Kevin, like I don't care how it gets there, or I want to use this asset and I want to use this chain or whatever, right? Like, is that kind of like, how do you guys kind of balance that messaging?
This is almost what I would have scripted to tee off the intelligence layer.
Oh,
This was perfectly asked. Thank you. We do get that question a ton, as you alluded to, and part of what we believe strongly in being incredibly neutral is that we want to allow for any and all fully reserved stablecoins to transact across Borderless' network. We're very big believers in that. I have very different thoughts about algorithmic stablecoins. I don't think that they're inherently bad, but I do think that they need to be another category of tokens versus fully reserved state. I think we should call them tokenized financial products, because if they weren't on a blockchain, that's what they would be. They would be a structured product or a financial product. I think that's how we should think of them. But any fully reserved stablecoin, we think should be able to transact on Borderless.
completely agree.
And so the way that we are starting to approach this is we sit on a tremendous amount of data, and we want to make that data accessible and open to the entire builder community. And part of what we're starting to do with the intelligence layer is start to look at all the different rates data, as an example that Borderless sits on. And we can start to say, okay, if you're sending money to Brazil, here's how the rates vary based off of these different providers, based off the different stables. So if you care a lot about this as a market, here's the cost advantage as an example of USDT versus USDC versus USDG versus these other things that's coming from, the depth of liquidity and partnerships, and let's also be honest, issuer incentives that are being created in these different markets. And then if you also want to slice it, you can look at it by chain and you can say, okay, if I have this asset and this asset can settle on any of these different blockchain networks, is there a price difference in the FX rate between these different blockchain networks? Because again, often there is, because again, the depth of liquidity is different across these different chains. So that's kind of one example of the intelligence layer that we're starting to build on top of just the connectivity, is to bring out these insights about things like FX rates, to start to think about, well, what does best execution look like? And then even to start to think about some basic things like, what does reliability look like? And as a great example, we had one customer who's kind of the launching off point of where we were thinking about this. And they're like, hey, I want to connect to multiple providers because especially in emerging markets, there's a lot of downtime and other issues. And I need plan A, plan B, plan C, plan D, et cetera, so that I can have really high reliability and just reroute transactions somewhere else if there's some sort of an issue with one of my local rail providers. Great, totally makes a ton of sense. The next question is, how do I find out there's an issue? And what they were saying is right now, they find out when people complain on X. And imagine that user experience, right? They find out that a particular rail is down because somebody on X is saying, hey, I can't withdraw my money on SPAY in Mexico, as an example. And then they find out, oh my God, my off-ramp provider that I'm currently connected to for all these SPAY transfers has some downtime. The API is down, they have a banking issue, whatever it is, right? It's emerging markets, reliability can be questionable sometimes. And we're like, wait a minute, this is really interesting. Can we add this intelligence layer that sits on top of the network where we have a ton of different originators that are processing transactions with the same kind of providers? Can we have some sort of a monitoring function? Think of like a data dog for stablecoin on and off-ramp transactions, where Luther, if you're company A and Rami, you're company B, Luther, you're like, hey, I'm having an issue with provider X on SPAY. And then, Rami, you're connected to provider X on SPAY as well, and you get a proactive alert, not from X, but from Borderless, that says, hey, we've detected potential transaction processing issues with the provider that you're currently connected to. Now your ops team can start to jump in and look at it without having users complaining on X. And you can go either Borderless, do what you want to do, or you can look at it and go, wow, you're right, reroute flow. And like those sorts of things start to sit on top of just the connectivity and now start to add a tremendous amount of business value in the back office.
Yeah, and you can do, I mean, the natural extension of that is, of course, auto-routing of trades and then execution of trades at the best workflow. So you can set those dynamic pathways. So yeah, that's hugely accretive to those companies that want to use it. You know, and again, reliability. Yeah.
This is what we think of as the intelligence layer that sits on top of just the pure value transfer capabilities of the network. And, you know, that's what we're starting to design with some of our design partners now. And that's, you know, we're certainly going to continue to expand the network. Don't get me wrong, right? That's what the network team is doing all day, every day. And now from a product perspective, we're starting to think about, okay, well, what can we build on top of this network? And for us, it's kind of what are the wheels that all of our customers have to constantly reinvent themselves? And how can we just productize those and give them the tools that they can run?
The beauty of that is that when I think about market maturity or technical maturity, if you take traditional financial services, the concept of running a ping every 10 seconds or 20 seconds, and if it times out, basically saying there's something wrong with this connection, has existed forever, right?
Yes.
But you know what's crazy? I've noticed this as well sometimes, like is that level of not maturity, but maybe the right word is like responsibility back to the customer. Sometimes I don't see it yet in the Web3 space where somebody says, if we're down for a minute, this is a problem. People are like, well, transactions generally used to take 5 minutes, so it's okay, like if you're down for a minute, you know? And so, but now that now, first of all, since blockchains are faster and cheaper, and we're really getting to roughly the same throughput as any other traditional financial services. And now that you have the assets that really can move, as fast as possible, I think you really need something like this where you know that this particular portion of the network is down or there's something going on here. So let's route it to a different provider, right? And it doesn't even show up. Like if I go to like payout in Mexico, the provider you're having an issue with doesn't even show up as an option because on the back end, you know, the Borderless, the intelligence layer has said there's something wrong with here. Like let's kind of stop using it. And it's better for us to like not show the option as opposed to like having the customer having a bad experience.
Exactly.
Right?
And the same could be applied, you know, it's I think more rare on blockchain networks because actually the blockchain networks themselves are more mature oftentimes at a lot of these endpoints. But if we look at last weekend, the same is very much true where a lot of public chains have this noisy neighbor problem. And if you're a PSP and you're doing, you know, global stablecoin payroll, you don't really care about what the trading and settlement volume looks like on Ethereum as an example, whose gas fees have now spiked to $40, $50, $80 to do a transfer. As a PSP that's not crypto native, this isn't something that you think about. So how can an intelligence layer sit on top of this workflow and say, wait a minute, you know, you really don't want to settle across this network, not just, you know, the endpoint, but also the network itself that's being used. You really don't want to settle these payroll transfers or this cross-border payment right now on Ethereum. You want to move it to, you know, here's another, you know, option that's going to do the same thing for you, but it's going to cost you a penny to move these funds versus $100 to move these funds.
I just wanted to ask a quick question on that point. What do you think about then sort of payment specific blockchains? Because I mean, I guess they were designed partly in part to obfuscate or reduce this specific problem. Do you have a view on those, or do you think that that's sort of not problematic, but like causes a separate set of issues that might be a consequence of that?
I think one of the things that I struggle with is a lot of payment chains right now are corp chains, right? So it's Arc from Circle or it's Tempo from Stripe. And I feel a very certain way about corporate chains, regardless of whether or not they're payment specific.
Well, this is your credible neutrality point, I'm guessing. Yeah?
Exactly.
Yeah.
And now, you know, the answer is like, would we work with those chains? And the answer is yes, right? We are credibly neutral to our core, which means including even those who may not want to include us, right? That's part of credible neutrality is to also include them. But, you know, there are also some payments chains that aren't corp chains. So thinking of like the Plasmas, Codexes, et cetera of the world. And I think there's two opportunities for stablecoin payments chains. The first is you have a noisy neighbor problem in the EVM world, in the Solana world, et cetera, where maybe it's not often, but when you do have large market movements, it jams up the chain with trading activity. It could be meme coin activity. It could be, you know, if the NFT markets come back, NFT market activity, right? If you're a payments company, you don't want that congesting your payments ability. And then the other, quite frankly, is even with gas abstraction, is the native token issue. And if you think about this outside of a blockchain world, imagine saying, hey guys, I know that you want to do these USD payments, but in order to pay the fees, I need you to hold a yen balance. You just be like, no, this is just not a thing, right? Yeah. And yes, there's been a lot of work there with like paymasters and gas abstraction, and a lot of chains, to their credit, have seen this as a problem and, you know, built a lot of abstraction where you can sponsor the gas fees, and sometimes there's like a DeFi swap built in so that you can sponsor the gas fee from the token you're sending. But those are all band-aids. That's all band-aids on top of the underlying fundamental issue, which is for their tokenomics to work, they need to be paid in their native token, which is back to, great, maybe the USD gets swapped into yen, but at the end of the day, I'm still spending yen to send USD, and that makes absolutely no sense to me. I think payments chains have a great opportunity to do network-related tokenomics that are in the payment asset, whether that is USDC, USDT, some sort of abstracted basket of stables, which is kind of our, you know, what we would suggest from a credible neutrality standpoint is you also shouldn't need USDT to send USDC, right? So you should kind of have this interoperability layer and some of those things. But I think those are the two most interesting things. And the challenge, on the other hand, is that blockchains are network effect businesses. So what is the ecosystem that exists today on Solana or Algorand or other places versus what is the ecosystem that exists on one of these new payments only chains? And can their ecosystem get enough traction to kind of cross the inflection point of where it can continue to grow? Or are they going to run out of VC capital to burn for incentives before they're actually able to do some of those things? And I can certainly see the value, but I think that it's very much, you know, an uphill battle. And part of that is why they're raising such big checks, is because they recognize the CapEx that's involved in doing some of these things. But I almost wonder if there's a better world in which you could create like dedicated stablecoin block space or something like that within an existing chain, and then be able to have the full ecosystems of some of these top chains while still being able to avoid the noisy neighbor problem and some of those things. So I'm not completely sold on the approach. But the more we talk to, you know, Web2 PSPs and payments companies that are looking to look at stablecoins, the more this becomes a problem. And I think you can argue that, look, last weekend was certainly an exceptional event that doesn't happen very often. And that would be true. But if you are, you know, a global bank, imagine your JPM as an example. It doesn't matter if there's some infrequent black swan event happening, your transactions still need to move. And the fact that, you know, some market maker is melting down on Binance, you literally could not care less, and you want your transactions to process.
One of the things that, you know, often comes up when it comes to even like a simple stablecoin sandwich, and for those that don't know this phrase, basically you start out in fiat, convert to USDC, USDT, some digital asset, and then you convert it back to fiat, right? That's why it's called the stablecoin sandwich. But, you know, one of the biggest challenges is liquidity, and I love that the intelligence layer will provide you this information around, you know, liquidity, but the way it's going to show it, I'm guessing, is that, hey, for USDT to INR, this is your current rate. For USDC to INR, this is your current rate. But what that's actually reflecting is the amount of liquidity it's on the fiat side, right? Are you guys getting into any of the management of liquidity or trying to provision liquidity on either side, or are you letting the end providers kind of take care of that and then just let market dynamics kind of play themselves out?
That's where we see the role as the providers. We see the role of the kind of stablecoin-enabled financial institutions in two pieces. The first is to provide the actual FX liquidity between the stablecoins and the local fiat pair. And then the second is to provide the local payments capability. So they're providing that liquidity, and then they're providing the access to the underlying fiat rail to then do that last mile or first mile, depending on the transaction flow settlement. And then Borderless is very, very focused on building the glue between all of these different companies and then building the intelligence on top of it for people to be able to transact at scale.
Makes sense. If we kind of build from there, Kevin, like, so the Genius Act passed, and then all of a sudden, like, everybody wants to talk about stablecoins, which is great for all of us in the industry. And, you know, those of us that have, and for folks like you that have been longer than I have, right? But what is it like, you know, I think stablecoins solve for so many things, but there's like a few things there's some like core financial service capabilities that still stablecoins like just still, they don't like address. Like for example, like debt payments is one thing that I've always thought about. Like where do you see, like if you kind of had to like further enhance the technology side or something like that, like where would you kind of start to focus if you kind of took like a view maybe just outside of Borderless itself?
I really feel that the era of general purpose single issuer stablecoins has come to an end. People that are trying to replicate Circle's playbook or Tether's playbook are going to, I think, really, really struggle. What I think the future looks like is stablecoins that have some sort of captive distribution. And that's where I think we're seeing a lot of work being done on either consortium issued tokens, so like the USDG and the global dollar network effort there, where they're saying, great, we're going to take a bunch of these people, put them together, and now we have a lot of distribution for the token that makes sense, and we have kind of the aligned incentives there. The downside, obviously, on the consortium issued things is the speed at which they can move and innovate, right? Like in just general course of business, last time you had 12 people in a meeting, how easy was it to get 12 people to agree on something, and how productive was that hour? You know, I think the same thing kind of applies there. And then we're seeing a lot of white labeled issuance into corporates. And I think where that makes sense is where those corporates then own a captive user base. So if you think about, well, and they're also then able to kind of do some niche tailoring around their use case. So what stablecoin is going to win on Amazon's platform? Probably an Amazon issued stablecoin. They're going to have a very interesting advantage in being able to do those things, right? Like which card wins on Amazon from a consumer checkout experience? It's the Amazon issued card because they're offering 5% back on all your Amazon purchases, right? I was at Lightspark's Partner Summit on Tuesday, and the fireside was with the CEO of SoFi. And he's talking about the stablecoin that SoFi is going to release. What stablecoin is going to win in like the SoFi mortgage origination and debt processing? Probably SoFi's stablecoin. Right. And I think that's where we're going to see a lot of this issuance start to come out. It's not going to be the next USDC. It's going to be fintechs. It's going to be banks. It's going to be large retailers and captive audiences that are going to say, geez, we've got a super active distribution in our own platform, in our own user base, in our own thing. Right. Think even outside of tech, think major manufacturing. So like NVIDIA and GPUs, right? If NVIDIA releases the NVIDIA stablecoin and says, great, we want to settle all of our manufacturing and our GPU purchases and things like that in our token, they control so much supply in the market that their vendors, distributors, et cetera, are going to fall in line and start to transact in that particular asset. Those are the things where I think there's a lot of future direction. And those are the tokens that I think will be able to be sustainable, not because the stablecoin itself is sustainable, but because the captive distribution, whether it's users, partners, supply chain, debt servicing, et cetera, of those companies is very, very sustainable.
Yeah, you got to monetize your moat.
I was just going to say, like, we covered this, Rami and I covered this about Cloudflare, like the Cloudflare stablecoin. Like, it's completely in line with what you're saying from that perspective. And this consortium aspect, like, I was surprised to see, like, in Europe with Kasha Bank and Unicredit and ING launching a consortium stablecoin, which I thought I would be like, I was really under the impression that going forward, this kind of goes back to a white paper that his name will come to me and I'll mention it here shortly. But like, it was like the Regulated Liabilities Network, the RLN, right? And so the whole concept was everybody would have their own stablecoin, which is what we're seeing, each bank having its own stablecoin. So when I saw a bank consortium launching a stablecoin, I was like, why wouldn't you have your own stablecoin internally and then just use like a USDC or a EuroC or something like that versus having a consortium kind of stablecoin? What are your thoughts on that?
Banks love consortium products, right? That's a good way to get distribution across different banks. And we see this all the time if we look at, you know, the Visas of the world, if we look at the Swifts of the world, or even if we look at products, right? So if we look at Zelle as an example, right? Zelle came out of Early Warning, which is a bank consortium owned company. Banks really like to do business with other banks. Most of them realize that the efficiencies aren't necessarily within their own ecosystems, but the efficiencies lie within like interbank settlement is a very interesting problem. And they're never going to convince each other to use their own stablecoins, But if they can default to this sort of consortium model, it's slower. It's probably going to be a weird Frankenstein concept.
It is also like a bunch of banks, right? Like talk about having 12 people in a room, having 6 banks in the room. Yeah.
Yeah.
But it's an easier conversation to have, rather than everyone trying to convince each other to trust my money. It's like, okay, let's all trust each other. This is our collective baby money. Yeah, let's use this one.
Clearing houses are credibly neutral, et cetera, et cetera. This consortium gets you closer to credible neutrality.
Yeah. But like you said, it's a slower route to market.
Mm-hmm. It is.
I think there's much more dynamic. I'm excited to see this start to happen. So, I mean, it's great that we're starting to see banks actually looking at this. Because remember, there's also the tokenized deposits versus stablecoins conversation.
Yes, there is.
Which is the form of money which is actually going to be winning out and can be used, wholesale versus retail.
Mm-hmm.
And then you've actually, the who's got the best moat? Is it the banks who have the best moat of the audience, or is it Web 2 / Web 3 companies who have just never had the thought process to issue their own money, but actually, I forgot, I've got like 50 million users. Maybe it's worth using this. And like say Amazon or someone else starts to issue their own dollar. And guess what? They've got a very, very defendable moat there. And I agree with you, Kevin. I think the era of new circles and tethers and these entrants that are just coming in saying, I'm a stable coin, please use me, and growing an organic distribution or capture of the market is going to be extremely difficult against these kind of new players who just have a much quicker route to a demonstratable massive market capture and revenue capture and captive capture. That's the point, I think.
Captive capture is the key.
Captive capture.
Exactly.
Wow. One of the things that I think worries me the most is like this adoption is great. Institutional adoption is even better because it makes it real, right? Like it's no longer people are like, maybe it's a thing. No, it's a thing. Like when Bank of America is talking about it, it's a thing. When JPM is talking about it, it's a thing. I think what concerns me is like we go from like this trend towards decentralization and then it's like a boomerang. We just like turn the corner and then come right back to re-centralization. All of a sudden it's so institutionalized that everything is dictated by a few key parties. And we're all here, standing here scratching our heads and saying, I think we had a different story in mind. Like, I think that's one thing that concerns me. I would love your thoughts on that, Kevin.
I think that extends across everything. If you think about what is the most decentralized thing on this planet, I think a lot of people would say the internet.
Okay.
And then you think about how much internet traffic runs through Cloudflare.
That is true.
Yes. It's a lot. And how much of your web application bandwidth that you interact with is served to you by either AWS, Google Cloud, or Microsoft Azure? The answer is a lot, right? So I think no matter how much we want decentralization, and maybe this is like a little bit sad, but maybe no matter how much we want decentralization, and we still have like really strong decentralization across like TCP/IP and things of that nature, right? So we may have really good decentralization around like blockchain nodes, validators, et cetera, ultimately, on top of that sits some sort of a services product layer. And oftentimes there is a tremendous amount of value in managed infrastructure, which is essentially what Cloudflare is and AWS and everybody else is. That's also what companies like Fireblocks are, right? Which is probably one of the biggest centralizing forces of blockchain. And the team have done a phenomenal job of building a true apex predator of kind of blockchain wallet infrastructure platforms. And, on the downside, that is a tremendous amount of blockchain being kind of consolidated and centralized into one vendor. But on the other side, how many people are going to reinvent their own Fireblocks in-house over and over and over and over and over again? So I think there's this natural push and pull versus decentralization and consolidation. And I think as long as the bare metal layer is sufficiently decentralized, then what will happen is naturally the market dynamics will create these consolidating forces on top of it, which are effectively these managed infrastructure providers.
Yeah, no, that's a really good way to put it. So just trying to wrap up here, Kevin, what is some advice that you have for others that are coming in from an adoption perspective, right? Like one of the ICPs that we try to kind of target is from a podcast perspective is a Web2 treasurer that's looking at the space and saying, man, where do I get started? Like, should I call Circle? Like, should I call Fireblock? Like, how, so like, what are some advice that you have? Like, not so much like beyond just like call Borderless, right? Beyond that,
That's
what
great advice, though. You said it, not
It
me.
is fantastic advice. I agree with you. How can they get themselves like a little bit more comfortable so they could go to their CEO or to their board and say, we should take this more seriously?
I think the answer is you've got to start to understand the stack. You've got to say, okay, if I'm going to start to use stablecoins, I'm not going to go into like how you should understand the value proposition of stablecoins, because I'm assuming if you've decided you want to explore this, you already have some, general concept, and there's tons of great podcasts, episodes out there from people on explaining, why you should do this and the cost benefits and faster, better, cheaper, the corridors that work, et cetera, et cetera. What I would focus on is understand the stack. Say, okay, what does it mean to transact in stablecoins? I'm going to need a wallet, because I'm going to need some place to hold these assets, right? If I want to go with the big name brand, that's a Fireblocks. If I want to go with some of the, younger, quickly growing companies, that's maybe a Utila or a Defense. If I want to go with embedded wallets, that's maybe like a Privy or a Dynamic or something like that. And it's about, okay, wallets, that's a thing. I need that. And I should probably understand what that means. And I should run some sort of a vendor selection process on what I want there. Then I need to understand what are the tokens and what are the assets. So there's USDC, there's USDT, there's USDG. Kind of where do I transact? If I transact primarily in emerging markets, then really Tether is probably going to be the better bet. If I transact primarily between the US and the EU, then USDC is probably going to offer me kind of the better asset, right? If I want to join a consortium, then trying to do something with USDG might make a ton of sense. I would not even think about issuing a token at this point. I would just be kind of, understanding the stack.
Yeah.
Great. And then now that I'm able to have a stable coin and I'm able to hold it somewhere, now I need to be able to deploy it around the world. And what that means is I need interoperability between the stablecoin and the fiat money and bank accounts. And for that, I'm going to need liquidity providers. And if you're transacting in a couple regions, you don't need a platform like a Borderless. You don't need a network. You can say, okay, I want partner A, I want partner B. I have created one corridor between those partners. That is the core of my business. But if you want to operate at scale, if you care about having things like redundancy, if you care about expanding your corridors, if you care about starting to get best execution around the FX rates, then that's honestly when you should probably have a conversation with us. But understanding kind of those three things of like, what does money look like? It's a stable coin. What does an account look like? That's a wallet. And how do I deposit and withdraw? That's an on-ramp and an off-ramp. Understand those three fundamental primitives is going to build you the right mental model through which you can start to evaluate your options instead of, kind of getting, and this is an unfortunate part of our market still, is the amount of rug pull, con artists, et cetera, people. It's true though, that operate in our world.
Yeah.
If you don't understand those three fundamental primitives, it's very easy to get taken for a ride. And the more that you can kind of understand what you need and how it works, the more you can quickly suss out, is this a credible player or is this somebody who's taking me for a ride?
Yeah, I think that's very, very, very well put. Very well put. So I was at a payment symposium in Chicago that was held by the Chicago Fed. And yeah, you can only regulate what you actually use. I was on a panel with Tony from Ubix, McLaughlin.
Yes, that's what I was thinking about earlier.
Yeah, I think that's who you were thinking of earlier.
Yeah.
And yeah, he made the point very well. I think that people from the OCC and people who are working in government aren't allowed to have a wallet. They aren't allowed to engage with the stablecoin. So, his point, very well put, is like, well, how are you meant to regulate it? How are you going to come up with good regulation? How are you going to know how to put the guardrails in place if you can't use it? If you don't use it, get a wallet open. I think we're so nascent and we live in our sort of echo chambers at the moment. We just assume everyone knows everything about what we're doing and the stack. And, those three concepts could be podcasts on themselves. They are already sort of, people could spend deep dives for it. And a lot of corporate treasurers, a lot of B2B companies don't even know anything about any one of those three things that we just mentioned. So yeah, we're very, very early. I feel like education is the key for really the next year or two, to be honest.
And
actually,
it's credible education. And what I mean by that is
neutral,
especially as this market's gotten frothy, there's a tremendous amount of LinkedIn influencer type, education content that is just not even, I think misleading. It's just objectively incorrect. So being able to, talk to people who have been in payments for a long time, who have been in stablecoins for a long time, who aren't your, what's the phrase that we like to use internally, armchair quarterbacks.
That's right.
Who, think that they know all these different things. It's really important to have credible, high quality education. And I think you guys are actually doing a lot of great things in that space with stablecoin partners. And I think it's a much needed role in our world.
We appreciate it, man. And it's been great having you. So thank you for your time, Kevin. Really appreciate it.
It's always good to hang out with you guys.
Yeah, man. It's fun. It's fun. And really, before we wrap up, right? The way that you structured it, the succinct way that you described the problem statement, I think was perfect. Like because that totally makes sense for a traditional person coming from TradFi, like wallets, layer one. Like the other day, somebody said to me, "What? You just mentioned a layer one. Like how many layers are there?" And I was like, I should probably just call it a blockchain. Stop using this fancy words. Awesome. Today we explored how stablecoins move from concept to critical infrastructure with Kevin from Borderless, covering liquidity, regulation, and the future of cross-border payments. And thank you again, Kevin. It was great having you.
Thanks, guys.
If you enjoyed this conversation, check out our previous episodes with Aishwari and Jamal from Polygon, Nick Philpott from Zodia Markets, or Ben from Braille, each offering unique perspectives on how stablecoins are reshaping payments and infrastructure. Don't forget to subscribe and follow the Stablecoin podcast so you don't miss what's next, and share it with a colleague who's building the future of digital money.